Today's highlights: record-breaking positions held to date, spot holdings hitting new highs. Does this mean the mid-bull market correction is about to end? Nvidia's earnings report caused a one-day rollercoaster. Bitcoin followed suit with a sharp drop. Can tech stocks still lead the way? With global liquidity injections and leverage being cleared out, can Bitcoin make a comeback in 2026? It's Friday, October 21st, on the Chinese channel Be United. I'm Dong Dong. Let's first look at the most important crypto headlines from the past 24 hours. The latest data online can be summed up in one sentence. Retail investors are being scared off while the whales are moving in. Large holders moving more than 100 Bitcoin are now holding 12 million Bitcoins, a historic high. Medium-sized whales, holding between 100 and 1,000 Bitcoin, are even more aggressive, now holding 5.28 million Bitcoin. Simply put, retail investors are panic selling, while the whales are opening their mouths to catch the falling knives. They're moving their Bitcoin into long-term wallets, so less is available for sale on exchanges. Historically, when people buy at times like this, the market bottom is usually close. In the short term, because the Federal Reserve is delaying and the US stock market is risk-off every day, Bitcoin has a pattern. It rebounds during the day and follows the stock market down at night, like a 9-to-5 worker. As a result, the price is hovering between $86,000 and $90,000. Don't get shaken out. Right now, it's exactly the time when the market is changing hands. Weak holders are throwing in the towel, and strong hands are slowly accumulating. Once this round of redistribution is over, Bitcoin's explosive potential in the future could be much greater than it appears right now. The market has been pretty interesting lately. The ratio of spot to derivatives trading volume for Bitcoin has shot up to 0.14, the highest since May 2023. It's a level you can spot at a glance. What does this mean? It means that people who are actually buying real coins have come to the table, while those playing with leverage have been pushed aside to sit on the sidelines. For a whole month, major exchanges have maintained a high level of 12% to 13%. When this kind of situation appears, it basically means that the market movement isn't just hype. It's being driven by solid buying pressure. History also tells us that whenever the spot ratio rises, the bull market quietly starts to gain momentum. If this ratio continues to hold at its current level, this round of the rally will not only be sustainable, but could also go much further. The foundation is much more solid than before. When Bitcoin dropped to between $88,000 and $89,000 this time, an immediate sensitive signal appeared on-chain. The percentage of UTXOs in loss, that is, every unspent Bitcoin record, or simply put, the cost label from when you bought your coins, broke through 20% for the first time. This might sound like a disaster, but history tells us that this is usually not a prelude to a crash, but rather a half-time break in a bull market. Almost all the losses are from short-term funds that chased in at high prices, while true long-term players remain as steady as ever. If this were really the start of a bear market, that number would have already soared to 30% or 40% and would be accompanied by continuous sell-offs. But the current pace actually looks more like an emotional cooldown in the middle of a bull market. So, as long as the percentage of UTXOs in loss doesn't climb past 30%, there won't be a large-scale capitulation in the market. To put it simply, it was just a scare, but the underlying structure hasn't been damaged. Please like and follow for more updates. Get the latest news from the crypto, blockchain, and mining circles 24/7. Click the little bell to join the channel and become a member. From Monday to Friday, claim your member's wealth password. The market movement over the past 24 hours can be summed up in one sentence. No matter how good the earnings report is, it can't cure the market's fragile nerves. Just 2 days ago, Nvidia released a dazzling third-quarter earnings report, and the crypto market immediately perked up and surged. But the good times lasted only half a day before two nightmares instantly brought everything back to reality. Will AI become a bubble? And will the Fed cut interest rates in December or not? The crypto market took a massive dive, like a supersized depth charge. The total market cap plunged from $4.3 trillion to $3.01 trillion. Bitcoin crashed to $86,100, and Ethereum fell below $2,800. The bulls were so shocked, their souls practically left their bodies. Although Bitcoin has now climbed back above $87,000, the real macro hand that's manipulating the market shows no sign of letting go.
Nvidia's stock price shifted from gains to losses, pulling down the market. The chipmaker had just released a quarterly earnings report after the previous day's close that beat expectations and raised its fourth quarter sales outlook. At one point, the stock rose 5%. Even though CEO Jensen Huang said demand for Blackwell chips far exceeded expectations and denied an AI bubble, Nvidia still closed down 3%.
We're going to build Nvidia's technology, the next generation of it, all here in the United States. And that wouldn't be possible without the president's leadership, his policies, and his support. and very importantly, his strong encouragement. And I mean a strong encouragement. Frankly, manufacturing in the United States wouldn't have accelerated at this pace without it.
After Nvidia released its data, the market cut the odds of a Fed rate cut in December by 25 basis points, with expectations dropping to 30%. The government shutdown delayed the September jobs report, but it showed U.S. job gains of 119,000. This figure was much higher than economists expected, further hurting investors' confidence in a December rate cut.
This year's halving rally is nothing like the old script. This time, ETFs have stormed in and completely rewritten the playbook. Traditional capital stepped in, and what used to be a 19-month post-halving surge has been forcibly reshaped into a new version of 2017. First, they hit you with a 20% shakeout, then slowly build up for another push upward. So, don't be in a hurry or think the bull market is over. The show is just on pause. For Bitcoin to hold out until 2026, or even surge to $200,000, is far from a pipe dream. This year's market action is a classic case of prices holding steady while sentiment collapses first. Bitcoin stubbornly stays above $90,000, yet the fear index plunges back to 16. It feels just like the crash of 2020 all over again. To put it plainly, the bull market is going through a shakeout. Veteran players cash out with their pockets full and walk away, while C-level players are left doubting their life choices as their positions get trapped. When sentiment collapses, their chips obediently flow to those with more patience and stronger hands, and the mastermind behind this whole show is the Federal Reserve. Originally, the market was hoping that interest rate cuts would bring a ray of spring, but as soon as the US employment and inflation data were released, expectations for rate cuts instantly turned cold. Then officials added, don't be in a hurry to expect easing. As soon as interest rates tighten, high-risk assets like Bitcoin are immediately choked, making it hard even to catch a breath. Although Japan, China, and Europe are all stepping on the gas and injecting liquidity, the flow is slow and its effects spread even more slowly, not yet enough to heat up this pot of cold soup that is the market. The current situation is a classic case of calm on the surface, but with turbulent undercurrents beneath.
Actually, we own around 25,000 Bitcoins, so we're just down a lot of money, and we're very consistent with our investors. We're not a hedge fund. We don't make trades. We have this pile of 25,000 Bitcoins, and we've had it for many, many years. But on the other hand, when markets are volatile, as you know, that's when people like to interact and exchange risk on an exchange. So we have very robust volumes, especially here in November, towards the latter half of October, and November really the highest week.
Capital flows show the market is in a deep rotation. Since October, crypto ETFs have had net outflows over $2 billion, with the largest single-day outflow at $870 million. Institutional selling has amplified retail panic, but on-chain data shows tokens are quickly moving from short-term holders to superstar and long-term holders, making the structure more stable. Meanwhile, the AI frenzy is draining liquidity. Once the AI valuation boom ends, its hundreds of billions in capital may return to crypto, offering a potential turning point for the market.
The current market really does feel eerily calm, like the calm before a storm. The Federal Reserve has already started cutting interest rates, and central banks around the world are following suit. Leverage in the leading crypto markets has basically been wiped out, and long-term players are holding onto their positions without budging. All the conditions you'd expect at the bottom are quietly lining up, but the problem is, in the next few months, we'll still have to tough it out through the market. Most likely, we'll just keep grinding along the bottom for a while. But once we get to the second quarter of 2026, the pace of rate cuts will accelerate. If Bitcoin makes another run toward $100,000 and we get a brand new bull market in the second half of the year, that's honestly not just hype. For regular investors, the biggest mistake is acting on impulse. Don't chase the highs, don't panic sell at the lows, and don't let your emotions take over. Just buy and hold Bitcoin and Ethereum for the long term. Keep some emergency funds on hand, tough out these bone-chilling days, and when the bull market really takes off, nothing will be able to stop it.
There are stories of getting rich overnight, but also carefully crafted scams. This is a chaotic, lawless, dark forest, but it also nurtures the spark of hope that leads to the light. The destination of faith is freedom, and the endpoint of consensus is equality. BitcoinTV guiding you through the fog to see the future and helping you gradually become wealthier together.
In 2026, the rupee stablecoin ARC launches. The Indian government wants a win-win, but the central bank strongly opposes it. With 6.7 million views, it's viral beyond crypto. BTCC partners with NBA stars for Black Friday giveaways and a major ecosystem expansion. Things are pretty conflicted in India right now. Ordinary people and businesses are secretly using dollar stablecoins to quietly transfer money abroad. The government just wants to say, come on guys, at least give me some face. With the whole world competing over stablecoins, of course India doesn't want to fall behind. So they plan to launch an ARC stablecoin pegged 1-to-1 with the rupee in 2020, and even brought in Polygon and ANQ to collaborate on minting. Bridging ARC1 would be cheaper and cross-border transfers would be smoother. For companies wanting to buy LRC, they'd first have to purchase government bonds, which basically helps the government sell some national debt in the process. A win-win, or even a win-win-win. But what happened? Unexpectedly, the most vehement opposition came from the Reserve Bank of India, RBI. It seemed like ARC not only stole the spotlight, but also hit RBI right where it hurt.
Digital currency, like regular currency, could be replaced by a digital currency.
The governor of the Reserve Bank of India emphasized in a speech at the Lahore School of Economics that India remains highly cautious about cryptocurrencies. Although policy decisions are ultimately made by the government and specific plans are formulated by working groups, the central bank's stance will not change. He refuted the view that India should follow the US in stablecoin innovation, stressing that India already has a robust domestic digital payment system and, unlike the US, does not need to follow blindly. He said,
to put it plainly, India's current attitude is to neither encourage nor oppose it publicly, but privately they're muttering that this thing has no sovereign backing and is all hype. The remarks made by Minister of Commerce Piyush Goyal in October made India's true feelings about crypto crystal clear. They want the benefits, but they're also afraid of falling into a big trap. The problem is, with such a huge population in India, if the government gives the green light and officially recognizes crypto, the 8 million local investors could set off fireworks and global coin prices might soar. Right now, it all depends on who can win over the government, whether the central bank can be convinced, or if crypto will be forced to change its face. In any case, this tug of war is far from over. BTCC is truly a veteran in the crypto world. It launched back in 2011, and now it serves tens of millions of users in over 100 countries. The key point is, in more than 10 years, it has never had any major scandals, making it a living fossil of stability in this industry. Its main features are contract trading, fiat deposits, copy trading, and various task rewards. Its style has always been low-key, steady, and reliable. Surviving through several bull and bear cycles is definitely not just luck. BTCC has not only witnessed Bitcoin's rise from grassroots to a global asset, but has also consistently maintained its presence in the derivatives sector. It's the kind of veteran player that doesn't say much, but is truly formidable. This time, they've teamed up with two-time NBA All-Star and 2023 Defensive Player of the Year Jaren Jackson to pull off a big move, launching a campaign called Blockbuster. The incredible judgment on the court and the masterful moves on the blockchain instantly fired up both sports fans and crypto enthusiasts. This video quickly racked up 6.7 million views. You could say this dream collaboration not only made BTCC's millions of users in over 100 countries trust them even more, but also gave their Jingwu Carnival event a serious turbo boost. Security should be top-notch, the experience should be ultimate, and the atmosphere should be absolutely electrifying.
The platform has officially launched this year's Black Friday real-world flash event, featuring a prize pool of up to 2 million USDT and a variety of physical rewards. The event runs from October 11th to October 30th. Both new and existing users can accumulate points through deposits and contract trading to unlock stacked rewards and participate in guaranteed prize draws. New users who complete their first deposit and contract trade can receive up to 100 USDT, while active traders who reach trading volume targets can earn up to 3,500 USDT.
At Token 2049 in Singapore, they made a major announcement. Over the next 6 months, the team will expand to 3,500 people, tripling in size. This essentially means evolving the exchange model into a fully capable Web3 platform. The most aggressive part of this expansion is the plan to hire 1,200 engineers in one go, aiming to integrate the entire ecosystem: wallets, AI, RWA applications, and even everyday payments like parking and buying coffee through the BTCC app. What's even more impressive is that they're adding over 50 legal experts. The message is clear: BTCC isn't just waiting for regulators to come knocking, they're getting directly involved in shaping the rules of the game themselves.
Tether's latest move is like turning on a gold accumulation cheat. They've stockpiled at least 116 tons, maybe even 120 tons, and reportedly 104 tons, pushing the total USDT value from just over $1 billion to tens of billions of dollars. Their scale is almost catching up to that of a small central bank. In the third quarter alone, they casually added another 26 tons, which is basically bringing home 2% of the global demand. The numbers are a bit brutal. Bitmain's market cap has plunged below $100 million, dropping 26% in just 24 hours. As of 11:30 this morning, its market value was only about $94.7 million. It's like taking a roller coaster straight down at high speed. The UK's SFO has launched an investigation into business markets, a project that had already run off. Back in 2021, they raised $28 million by selling NFT memberships and issuing tokens, but then suddenly shut down. Now, investigators have already conducted searches in London and West Yorkshire, arrested 2 people, and conveniently took away all the equipment and documents. The Senate Agriculture Committee has advanced Trump's nominee for CFTC chair, Michael Selig, to the full Senate by a vote of 12 to 11. The public is watching closely because Congress is currently considering giving the CFTC broader authority to regulate crypto. Donald Trump Jr.'s bet on M directly brought Dogehash into the fold, turning all the Dogecoin and Litecoin mining farms into part of their own team. Next, they're planning to rebrand and make a fresh start. What's even more astonishing is that there's still $52 million sitting in the account, clearly ready to make another big move in the crypto world.
Today's lesson: the moment when a person is most clear-headed is when they begin to understand their own value. You know, it's not that you're stingy, you're just reallocating your time and energy. Those who never respond to you aren't worth your continued effort. Those who never keep you in their thoughts aren't worth your persistence either. You finally realize that love isn't about sacrificing yourself to gain someone else's insignificant approval, nor is it about giving all your tenderness to someone who never looks back at you. Your kindness is precious, and your patience should never be taken for granted. As we grow older, we should understand that silence is the most powerful form of rejection, and indifference is the clearest answer. Taking 1 step back shows your manners. Taking 2 steps back shows your generosity. But if you keep stepping back, you're not valuing yourself. If you understand this, please give us a like. Alright, that's all for today's main content. Our channel focuses on valuable news summaries in the crypto, blockchain, and mining industries. We provide news updates as well as in-depth special reports. If you find our channel valuable, feel free to share and follow us. You can also become a member. From Monday to Friday, members receive exclusive wealth tips. Let's get richer together and add a zero to your assets in the bull market. See you tomorrow!